Good morning. Today is Monday, January 8th, 2024. Stocks retreated in the first trading week of 2024, struggling a bit after a celebratory end to last year as investors second guessed Fed signals and fretted over lingering inflation concerns. Next week, Thursday, is our first monthly client check in for 2024. We will be live in person at Oak Ridge Country Club in Hopkins. The markets got off to a little bit of a rocky start here this year, and these monthly check-ins are your opportunity to get a sense for where we see things headed. If you have questions about the economy, the stock market, or if you just want to come out for a nice lunch, you can get all the details and RSVP on our website, which of course is investwithccg.com. We are currently about half full, so if you want to come and you have not yet signed up, please do so today. With that, I'm going to go ahead and roll the intro. We'll take a closer look at what happened in the markets last week.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
Stocks got off to a rough first week of the new year, with tech names leading the week's declines. Several market observers called it the reverse Goldilocks effect, where the market decided investors were getting a little too excited over the prospect of a Fed rate cut. Stocks bounced up and down each of the four trading days, but ended each one down except Friday, when the Dow Industrials, Nasdaq Composite, and S&P 500 all ended the day in the green, when jobs data helped soften the week's slide. In the end, the Dow Jones Industrials Average declined 0.65%, while the Standard & Poor's 500 declined 1.8%. The Nasdaq Composite Index was in the red 3.78%, the worst week since September. And the MSCI EAFE Index, which tracks developed overseas stock markets, declined 1.27%. On Wednesday, manufacturing news came in better than expected, lifting markets until the December Federal Open Market Committee meeting minutes were released, revealing that the Fed members had discussed rate cuts for 2024, but in no specific terms. Jobs and services sector news painted a better picture of the economy on Thursday, but as the 10-year Treasury hit 4%, stock prices responded negatively. Finally, employment data helped buffer the week on Friday as employers added 216,000 new jobs in December, besting estimates from economists and surpassing the 173,000 jobs added in November. News of unemployment remaining steady at 3.7% also helped sentiment. As always, we will continue to keep our finger on the pulse of what's really going on in both the economy and the different investment markets. This week's key economic data that we are paying attention to includes tomorrow, Tuesday, report on international trade in goods. Wednesday, we will look at the EIA petroleum status report. On Thursday, we get a look at jobless claims, the consumer price index, and treasury statement. And then wrapping up the week on Friday, we get that producer price index. With SmartMix, we primarily invest in individual stocks, cutting out the many hidden costs that can be found in today's investment products. Some of those individual companies reporting earnings this week that we're watching include those names that you see on the screen. You can learn about our low-cost, fully transparent, and personalized approach at smartmixportfolios.com. All right, that is it for today. Thank you for staying until the end. At CCG, we serve a lot of retirees. I personally spend many hours hearing about things, lots of different things that people are doing in retirement. I also get asked, maybe even more so, about what other people are doing in retirement. So I thought, why not do that here? Why not share with all of you what others are doing in retirement? But I need your help. I don't want to share anything I have not been given permission to share. So if you are in retirement or you have plans for retirement, and you'd be willing to share a picture of something fun that you've done or that you're planning to do, whether it be a trip, a memory, something you did with your grandkids, maybe a tip that you have for other retirees, or anything about retirement, something that you think others would enjoy seeing or hearing about, or that would be helpful. I would love to feature it here. All you have to do is send me a picture with a brief description. I will only use your first name and do my best to not identify exactly who you are. As a little bit of encouragement, if you do this and your picture is featured, we will send you a gift card for coffee on us. So again, that's it for today. Thank you for staying until the end. Remember, when we're done here today, go RSVP for lunch at Oak Ridge. That is next week, Thursday. And then lastly, later on today, as always, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. As we approach tax season, we'll want to pay special attention to these tax tips. So if you like this email and you're not getting it, of course, you can subscribe at our website, www.investwithccg.com.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.